covering that together?
No, we're covering that together.
Beautiful.
Awesome. Here we go. Ladies and gentlemen of the interwebs, welcome to the Beacon TVL show, the weekly podcast from Beacon DeFi, your beacon in the world of decentralized finance. I'm your host, Professor Chris, and we've got a great show lined up for you today as we tackle the news of the week that's relevant to you, our dear users in the world of on-chain investing. Today on the show, let's start off with DJ Robert A. Williams. Hire this man, but technically now a Talisman.
Yeah.
Sir, how are you?
Good. Yeah. Talisman is a project I've had ties to for a few years now since their inception, and recently hopped on the growth team there. Pretty
Excellent.
stoked about that. Yeah.
Congrats, sir.
Yeah,
the months of us saying hire this man have come to fruition. So if there's anyone else out there that wants a job in Web3, come on the panel. We'll get you hired.
It eventually will.
Also, there you go. We actually got that working. So along with Robert on panel, we have today Chase from Neptune Finance, leading AMM in the injective ecosystem. Welcome, sir.
Hello, welcome. Thanks for inviting me. Happy to be here.
Thank you so much. And what is your official title at Injective? I'm sorry, Injective at Neptune.
It changed a few times, but it's a co-founder role, but not a co-founder role at the beginning, which is kind of a funny story. But it's co-founder now.
Very good. Beautiful. Well, thanks for being here. We will jump into Injective as one of our focus topics in just a little bit to introduce our community to this fantastic protocol. We met actually in Salt Lake City, so thanks for coming on. It's been a couple of months coming, and excited to. I know you saw Andrew in Thailand as well at DevCon, so I hear that was a fun time.
Yeah, I keep running into you guys. I think there was another conference in there as well that I saw you guys at, but I think we're at 3 now, 3 or 4.
Hey, I'll take it. Anytime we can keep these ties going, I really appreciate that. So, just as a heads up to everybody, put a 1 in the chat if you're on Twitter, if you're on YouTube, if you're on Stream.tv, Twitch, wherever else we're streaming right now. If you can hear me, okay. I'm currently in the middle of what we're calling the Snowicane version 2. We had one 2 weeks ago that didn't hit us, but this one, it's like we have a 1,000 snowmen just throwing snowballs at my front door and windows. So interestingly enough, my lights keep flickering. I keep thinking I'm just blinking because I've had too much caffeine, but I see a lot of comments coming in, so thanks for that. We'll go ahead and get started with what we start with every week, which is looking a little bit at the market. We have some interesting, it's been an interesting market. Let me make this a little bit bigger, actually. Let me zoom in here so that people can, you can actually see that. Look at that. There we go. I guess I should learn keyboard shortcuts at some point. So we're looking at the market. Looks like we are back on an uptrend. Today is the FOMC meeting here in the U.S. So we're going to get some interesting numbers, I think, to see where we're at. I guess it really depends if we're going to get some rate cuts this year. Inflation is actually slightly down. All things considering, people have turned eggs into a metric of economic health for some reason. So the price of eggs has become a metric of some point, depending on where you are in this country. But looking at the market, we're seeing a pretty decent upturn. Now, we can talk about the insider whale at Hyperliquid that put out a 40x short that has been battling all kinds of people taking the long position on the other side. They went and also took a long position, a leveraged long position on Melania as well. That was kind of the story of the weekend. I don't know if you guys did you guys participate in the longing to try and get this guy liquidated out of curiosity?
I did not know.
That's okay. I didn't either. But the comments were interesting. It made for some interesting theater. In any case, we're seeing some definite upswings. I mean, look at Ethereum at 9% up. We'll talk about XRP in a second because that's seemingly the big news of the day. But we're looking upwards, ladies and gentlemen. So this is a good sign. Now we just need this Solana number to increase by another $100, and then we'll be all happy vibes again. But looking at bubbles, if we go by the day, as you can see, even week, we're seeing uptrends. Sorry for you pie people. but we're not going to really talk about that either. We're seeing a lot of bids on a lot of coins. A lot of people are talking about that the bottom is in, and we're not really much of a trading group, but we are definitely a DeFi group, and a lot of this stuff involves a lot of DeFi protocols and blockchains and all that type of stuff. So I just kind of wanted to get a quick vibe check before we continue on with some of this other stuff. So we'll start with you, Chase. How do you feel vibe-wise about where the market's at right now?
Yeah, we're in a transitionary phase, feels like. Seems like somewhat similar to prior cycles where you get the last little punch of pain right before things take off. Everyone seems to be thinking that we're going to get that takeoff again, but I'm starting to see less and less excitement and enthusiasm for that. People are starting to price in maybe not getting that bull run that everyone was expecting. But I will say that it feels about the same as prior cycles, but we should be turning around in the next month or two. If it doesn't turn around in the next month or two, then we might be going in for deeper pain. Who knows?
Yeah, we'll all just end up at the same conference and go work at McDonald's or something like that. Pretty much. How about you, Robert? What are your vibes right now?
Yeah, I totally agree with all of that. It does feel like like a typical big dip, right before takeoff from past cycles, and I would say we're kind of approaching neutral status right now in terms of sentiment. I think at the max, the fear and greed index was like around 15 in the past few weeks. Now it's like around 37, I think, something like that.
Yeah, fairly neutral.
Yeah, and so I think most people expect the Fed to be neutral today too. It's not really do or say anything, so it might be just ranging for a little while and hopefully taking off soon.
Let's hope so. What I wanted to get into, and this is really more again based on something that we fundamentally talk about here at Beacon as a as an educational company, and that is security, safety. So it all started with Microsoft coming out with a report on a remote access Trojan. Basically malware is basically what it is. If you understand what malware is, it's basically something that you download unexpectedly and just gets released onto your system and then can take control of your system. This one is based on the CTO at Ledger. This is Charles Guillemet. This is very interesting because he's making a case for something we talk about all the time, which is get a hardware wallet. It's the first thing we tell all of our new members, when they join our accelerator, when they join our mastermind, is the first thing we tell them is to go get a hardware wallet. And this kind of definitely hits on that, but it's more than that, because in the last 24 hours, every single wallet manufacturer in terms of web wallet, software wallet, has come out and actually talked about this. So basically, it is just malware that gets on your system and then is trained specifically to go after any of these specific web wallets. I'm sure they can go to any others. So MetaMask, Trust Wallet, Coinbase Wallet, Phantom, basically all the major wallets that people in our group use. We of course have Rabby Wallet as our main recommendation, and Rabby did come out with something as well. And now, what I want to say here first is it's very apparent that this is a Windows-based Trojan. But with that said, if you are a Mac user, if you are a Linux user, this should give you no pause for comfort, because this affects everybody regardless. In fact, you could even make the case that mobile is even worse. So this is why, and that's the reason why we don't recommend using mobile for DeFi overall, although we've loosened that stance lately since the bull market started. But essentially, what this means is just be careful with what you download. We'll have the link to this whole tweet in our show notes. But it's all about having what we call operational security, good OPSEC, right? Because we want to make sure that you're practicing not only just good physical security, but also operational security, making sure you have wallet separation. And that's a lot of what this talks about. So if you have set up what we call a hot wallet, meaning a wallet that you have downloaded off the internet as a Chrome extension, and then you are now using it to go and transact. Don't put a ton of funds in there, right? Use a hardware wallet, something more secure on the backside where you do most of your investing from, whether it be yield farming, whether it be NFTs, whatever that you do out there. Because something like this can go and it can actually steal your funds. And if it gets your seed phrase, your funds are toast anyway. So just kind of wanted to, get everybody's take on this. These things happen frequently enough, in my opinion, that this isn't really a wake-up call. It's just more continued awareness that there is more, specifically in a bull market like that we are in right now. With bull markets come more bad actors. There are more people out there looking for people who are A, ill-prepared, and B, uneducated. And that's the whole point of the reason why we exist, is to combat those two fronts specifically, making sure you are educated and well-prepared. I'll start with you, Robert. Any thoughts on this specifically? This doesn't say not to use a hot wallet. You should be using a hot wallet, specifically when you are exploring. And we'll talk about some other things in a second. But I wanted to get your thoughts on this. First off, does this give you a lot of fear?
Yes and no. I mean, I would say I feel like the trend is for crypto hackers now is, I mean, in the wake of the safe hack not too long ago,
right?
Is to we would hear all the time about protocols being hacked, finding some kind of flaw in their code base, and that kind of leading to the protocol unraveling or kind of losing funds, falling apart in those moments. But I feel like it's shifting a little bit more towards targeting people's devices now. I mean, the safe hack, for example, was one of the multi-sig participants' devices being hacked, and then they were able to obtain the AWS tokens and swap out the safe interface. And so that's more complex than this, but I feel like the overarching narrative here is just for individuals to be a lot more conscious about protecting their devices and where they actually have their wallets installed.
Thanks for that. Chase, as a founder in this space, I want to get your thoughts, because you're coming from the other end on this. So making sure that your users are safe, that they don't fall prey to these things on the outset of them coming to your protocol. What are your thoughts on this?
Anytime that there's more fear in using wallets and getting deeper into DeFi, it's a negative for us. So we really don't like seeing this, of course. A lot of our users do use Ledger, and it's a lot more cumbersome, but they do it because they feel more secure. And who knows, I assume that they're taking proper care of their keys. But some people, they treat crypto as this thing that is already high risk. So for some reason, taking care of keys sometimes slips when it's a significant amount, but not like world-changing amount sort of thing for them. We see this all the time. They start out with $1,000 or so, keep it on a wallet that, whatever, just playing around. Then it grows to $10,000, $15,000, and it started as this fun money, and now they kind of forgot how they started and didn't go back and clean up their security practices. And I think that's something we all need to just remind ourselves of, that every 6 months or so we should take perspective of what we have in each of our wallets, how it's secured, and maybe move wallets around, move keys around, so that you can start fresh with a new key, knowing where it is, and hopefully with better security practices. Because these things happen all the time. It's really tough as a founder when we hear one of our users, something like this happens to them, and they're kind of asking us what happened, and we just have to look at the Explorer and tell them it got sent to this wallet. That's all we can tell you.
Exactly. And that's why operational security, or OPSEC, is so important for you as a user, as an investor. These are all things that we teach from the ground up at Beacon. And ultimately, it's about two things. It's about, A, making sure that you compartmentalize your risk. So in the event that you're going to check out new protocols, if you're going to be doing some speculation, just looking at new things, use a different browser profile. And I'm actually using Brave browser right here. You actually have I have a bunch of profiles here. You would just click on add new profile from that screen, and then you get a brand new browser, but it's just a different profile where you can install any additional extensions and you don't have any of those issues. So I specifically have profiles just for testing new protocols, just for testing new wallets, because new wallets come out all the time. I want to make sure that we have the best recommendations for wallets for everyone in our community, and making sure you have good seed phrase security in terms of making sure that you do the right things with your seed phrases. You use strong passwords using a password manager or whatever else that you have, and that you just take care of your funds, because these are your hard-earned funds. You're the only one who holds the key to your seed phrase. And for some people, a little bit too much of responsibility to have this journey of what we call self-custody here. And that's okay. There are other things you can do outside of DeFi if that's something that you're not comfortable with. There's new wallets that are coming out. Talisman, for example, is a great example of that. Other wallets that are using other onboarding things, using things like Privy and Dynamic and stuff like that, where you can actually use biometrics. You can use social or email logins, that type of thing, to help combat that, so you don't have to worry about that too much. But overall, much like having a safe for valuable things, you should have a hardware wallet for any specific DeFi or crypto assets, digital assets that you really hold near and dear. Keep it on a separate wallet, never touching DeFi or any of these other services, and it's something that you can transfer things back and forth from. Just a very simple thing. Quick segue also to our free group, Total Value Locked. If you want to learn from the best in the business on anything we just talked about here, please join our free group. It's absolutely free to join. We just turned a year old about a month ago, and it's been a fantastic journey. Please join us, school.com/beacon, absolutely free to do so. And come where everybody else is coming, because again, we want to be your edge in this really large arena. It can be very overwhelming to know about everything that you need to know with regards to security. So please just come and check out this Start Here post. See if we have a bunch of free content you can go through, and then we also have some paid offerings if you want to get there faster, or if you want to learn if you want to be with the best investors in all of DeFi, you can join our Beacon Mastermind, where you get real-time access to us, one-on-one coaching, and all that great stuff. Here at TVL, Total Value Locked, school.com/beacon. And you'll get to learn more about risk separation, wallet separation, and why it's important to do so. Well, let's go ahead and move on to some more happy news, gentlemen. And again, I don't know, are you, I guess the better question, Chase, are you an XRP maxi at all?
Not an XRP maxi.
Not an XRP maxi. Robert, have you been adding to your XRP bags?
Can't say I have.
Okay, fair enough. Well, XRP just keeps getting the gifts that keep on giving. Obviously the Trump presidency was gift number one. Gift number two is that the SEC, even though XRP won against the SEC in the middle of last year, SEC came back with an appeal. They have now dropped the appeal. So now XRP is free to go about their business. Clear air is ahead for XRP. As they start up and rev up their engines for not only their Apex conference, which is coming in June, which I might be going to, but also for more rollouts as they get closer to bringing smart contracts and DeFi infrastructure to XRP with their XRP Ledger ecosystem. Also, it's going to open up the way to multiple XRP ETFs that have been filed since late last year, although it's probably going to be later in the year before we even see anything moving on that. And probably the biggest thing, and that gentleman right there, Gary Gensler, ladies and gentlemen. Probably the biggest thing, that's the biggest precedent that's being set here, is now that the SEC has dropped this case with XRP, a judge ruled that that XRP is not a security. So it's now going to open the floodgates, right? Because America is such a precedent-based society when it comes to litigation, that ultimately the majority of these companies are going to be able to start doing things. Operation Choke Point 2.0 is now dead, with something like this officially dead, because now banks can do what they want. XRP is not a security. Other cryptos aren't going to be a security. Wanted to get your quick thoughts on this, Chase. Starting with you, is this bullish for everything in the sector?
Sure. I think they've dropped a lot of cases across the board. If you look into it, I think there's like 20 that have come up in the last few months here. So it's not just XRP getting passed on, and the attacks are starting to die off. Realistically, there's not really a news story there. Like SEC attacked them, and then they won, and then that was positive, but the underlying product and coin and everything, nothing really changed. I don't hear anything about what they're building really. And for some reason, everyone gets really excited about there's a case, there's not a case, there's a case, there's no case. And to me, that's all just noise. So personally, I'm not a XRP bull, never have been. And I've been in the space for quite a long time, and I've never understood why it's been where it is. But that's my hot take for you guys, because it seems like you guys might have a different opinion.
No, I'm not an XRP maxi either.
Okay.
I've been in the space a long time as well. I for me, it's a bit too centralized for me. At Permissionless, I did meet with a lot of the Ripple folks there, so I'm curious to see where we go with this smart contract addition that they're adding to bring DeFi to XRP. But many people in our community, many people who come and watch this podcast are big XRP holders. So if anything, you're back to where you were when you probably bought XRP. So that's a good sign. You can only go up from here, I suppose. Robert, any thoughts that you have specifically on this, if you want to call it landmark decision for crypto with XRP?
Yeah, well, I do think the implications are pretty huge. I mean, I do believe in, correct me if I'm wrong, but XRP did have like an ICO type sale to the American public.
I believe they did. If they did, I did not participate.
Yeah, but if that's the case, then if XRP is not a security given those circumstances, then no altcoins are securities. I mean, that's the takeaway that I get from that. And
exactly.
Yeah, that just like opens up everything completely.
Yeah, and I think that's a big deal.
I've got a question on that one though. If there isn't a process to become a security, can it be a security?
Well, they've been trying to use the Howey test on it, right?
Yeah, but I mean, there was never a process that companies have tried. They tried to become a security properly, but it's just not equipped for crypto. So if you can't legally become a security, how do you declare it a security? So that was like always the circle I found, that there's no logic if you can't properly become a security for a lot of these tokens. I'm not saying all of them. All of them could very well become securities, but there's a select few, or more than a few, that it's pretty hard to put it into the box of a security.
I agree. Like Peanut, right?
Sure. I think that's an interesting question, because I mean, I think as actual traditional securities and equities get tokenized sometime over the next, let's say, like 5 years, I'm assuming that there will be a path for certain crypto native assets to become securities, like in the same basket or on the same platforms, like NASDAQ, for example, as those other traditional securities and equities. And so that will be a process, but yeah, the question is like, how do you deal with that like retroactively?
Exactly.
It's a strange dynamic.
That's a good point. I mean, now that we're definitely going to start seeing a lot. They're trying to tokenize everything, right? So ultimately, I think this decision affects more of that type of thing, to be honest, because frankly, a lot of, at least in DeFi, I mean, what sovereign rules actually apply to it? At this point, nothing, which I think, lends to your point, Chase. So, but I do think in the event that more things get tokenized, we start seeing more things tokenized across multiple nations and bringing them on chain. I do think this brings an interesting, maybe just a test to see where we can apply any of these security rules, which again, they're not registered securities. So I guess there's the other there's that part as well. Well, but there will be a framework coming soon from all these crypto task forces, at least in the U.S.
I hope so.
I think there'll be a couple. I think to me it says that there'll be a couple more years of Wild West type crypto, and then it'll be like much stricter rails and a framework for compliance, and then that'll shift the whole market.
Yeah, I think
heard
honestly,
that all back in 2020 before, definitely. Everyone was like, framework's coming, regulations coming, and here we are 5 years later, and we're like, framework's coming, guys. Next couple of years, just a little bit longer of this Wild West side, and I really hope it's coming, but I'm pretty jaded to all that now.
That's fair. No, that's fair, right? Because I think a lot of people forget that, with everything that is happening now with this administration, DeFi didn't exist when President Trump was president. So the first time. So I think we're going to see a lot of very interesting shifts in not only just behavior, because he's famous in 2019 for saying that Bitcoin is a scam. He's obviously, shifted that stance 180 degrees now that he, has his own DeFi protocol and has greenlit, a Bitcoin reserve as well as a digital asset stockpile. So I think for me, what will be interesting is seeing how institutions handle this, because institutions have been front running retail for the last couple of years down into DeFi. Now we have RWAs as a huge narrative coming about. We'll talk about that in just a minute, and how that's going to ultimately shape the way the banks, I think, are going to come down as well, because now banks are able to participate, at least in the US, in DeFi-like activities without any penalty. They can do stablecoin transactions. They can handle that type of facility. And now with big companies like not only just MoonPay, who just bought Iron, but Stripe, who bought Bridge, we're going to see some huge infra from Web 2 and TradFi coming down into Web 3 and DeFi to really start to develop everything we heard back in 2020. You could just say the conditions are just right now for this type of stuff. So very interested to see how that works. And, we talked about being early in 2020 and 2021. We're still early and it's 2025. So we'll see where we go from here. I'm going to go ahead and move on to our next story, because we just want to get to talking about Neptune in just a minute. But currently right now we have, there's a lot of people. I don't know if anyone from your team is actually at the DAS. Speaking of DAS, which is the Digital Asset Summit, which is a huge institutional and trade show going on in New York City this week. In fact, yesterday, Stanley Kulichov from Aave, Brad Garlinghouse from Ripple, multiple big name people were speaking at this conference, and today's day 2 of that. And we've got a ton of really well-known people who are going to be speaking here. Many are in the U.S. legislative branch. Many are private and VC members. But we're going to see some interesting talks this week. A lot of shoulders rubbing with a lot of things that are happening. But I just kind of wanted to bring this up because I'm hearing some interesting narratives coming from the show, rather from the conference so far. And just based on the first 18 hours, I've already heard some things that have really just validated a lot of what we heard. So first off is that crypto and AI and information partnerships are going to continue to be a huge catalyst moving forward. RWAs, still a very huge and still the leading narrative in terms of TVL and that type of stuff coming down into the space. Again, not fully realized because it's mostly just on the EVM side, but I think all ecosystems are going to start seeing more RWAs or real world assets, tokenized assets based on US debt, precious metals, oil, other commodities. That it's all coming. And then there's also just been an interesting shift, even if just on the timeline, calling back for DeFi strength as DeFi is starting to surge again. We could see a DeFi summer starting very, very soon, and a call to fundamentals and first principles, meaning investors should, come away from trying to find the next big 100x and start going back towards Lindy protocols, trusted protocols that have good product market fit, protocol sustainability, and revenue, because that's the type of stuff that matters to investors now. So basically, it just means that there's just a call just to stronger protocols and fundamentals. Wanted to get your opinion or your take on that at all, Chase, as someone in this space who does, work with a protocol specifically with lending AMS.
Yeah, we took a fundamentals first approach across the board. So we kind of killed hype in a way, or whatever, unfounded hype, tried to avoid it. And we got a lot of, I don't want to say flack, but a lot of people were confused by this because they say that crypto runs on attention. And the more attention you have, the bigger, better project you can grow. And yeah, I don't disagree with that. We've seen a lot of projects that are able to capture a lot of attention early, even though there's nothing, and then transfer that attention into real users and real products and so on. But for us as a lending protocol, we want to be built into the background of applications and wallets and everything that people are using, so that you don't even have to know you're using Neptune, but you're just getting a stable yield through your wallet or through your exchange or through another DEX or something. So we already have a few really cool integrations, and that's the path we want to go. And it doesn't require this hype in order to get there and to grow. But I don't think it can work for every project. I think there is still a place in crypto where you still need that hype to get started. There's a lot of projects that are the same as other things. And for those projects to get the amount of users they need to be sustainable, you have to drum up the hype. So I still think there's still a place for hype in crypto for the foreseeable future. But I am very happy to see the trend shift from meme coins to fundamentals more widely. I don't think the hype train is, I don't think it's going to look like stocks anytime soon. It'll be very much wild, volatile crypto still.
Yeah, I completely agree. I wanted to get your thoughts, Robert, as we pulled up this Dune dashboard that I've been following specifically on pump.fun, which if you want to be, if you want to look at it as the nexus of probably a huge explosion into at least Solana's ecosystem at the beginning of last year. One thing you can definitely say about what's going on with pump.fun is that revenues are down and the graduation rate is down, which means then just quickly, it just means the number of coins that are eligible to be listed on markets like Radium, like Meteora, like Jupiter to be purchased, at least on the Solana side, have decreased. And if something like this is decreasing, that also means it's decreasing most likely on other ecosystems. So one thing that we heard when we were at Denver together was people are wanting they want meme coins and pump.fun to die. I think they're getting their wish because people are fleeing away from this lottery system now to specifically going back to first principles and strong fundamentals in DeFi. What are your thoughts?
Yeah, absolutely. Yeah, so I think like what you mentioned with like the lendiness effect and garnering attention for projects that actually do generate revenue and are building in that direction. I think that's really important because even if you exclude like the massive amount of meme coins on Pump.Fun and Solana, and even if most of them, they will be dying out, right? Most likely for quite a while. maybe some will make a comeback, but even if you exclude meme coins, there's still an exponentially bigger number of projects out there than there was in the last cycle 3-4 years ago. And so when people talk about like attention being the name of the game, I think what's really going to draw investors and draw attention are those projects that are reliable, have a real revenue model, and have actually some kind of path beyond just another hype cycle.
Yeah, completely agree. And what's interesting is that we're waiting for projects to lead the way, right? We were like last week we tried very hard to, instead of talking about how bad the market looked, try to build up projects, builders who are trying to make a difference, that type of thing. So the one thing I wanted to bring up last before we go start talking about Neptune is you can't deny the power of Coinbase as a marketing machine, right? They're ultimately now, I guess they are the biggest CEX in the world. They've got a ton of US and international users, and they've been starting to become more DeFi by the day, right? Started off with offering loans to their user base using Morpho as on base as the back end for that. They mentioned, we've talked about it on the show here, they're going to be bringing on Coinbase as a CX, bringing the mothership on as the DEX by Q3 this year. And now I think the interesting part that they've come up with is you can stake on Coinbase, but can you really do anything with liquidity? And they decided to pull the trigger. And now that is available through Coinbase verified pools. Now, I have thoughts on this because this is very much CeFi, right? And we are pro DeFi, which is decentralized finance. So Coinbase owns all of, when I say they own these pools, they are facilitating the usage of these pools. They are verified pools. So meaning they're only open to a specific demographic of Coinbase users, meaning you have to be in a supported country that Coinbase has specifically for this. And I had a window for it. There we go. You have to have a Coinbase wallet to use this, using their Prime onchain wallet, which I guess is a new version of their smart wallet. It is self-custody liquidity, so it is your money that's going in there. But they are permission pools, and what I mean by that is, you have to be KYC'd or on an access list to be able to not only supply liquidity but interact with liquidity, which is, it is what it is. But you can do this from the mobile wallet. You can do it from Coinbase.com. You will receive a specific amount of yield for doing so. But the interesting part about this, and this caused a little bit of a hullabaloo yesterday, yes, I used the word hullabaloo, is that to build this, they didn't use the largest DEX on base, which is Aerodrome. They used Uniswap. And at the time, I thought it was a bit shocking because, if base is all about supporting builders, you'd think you would choose the biggest one. But sleeping on it, I think the decision makes a lot of sense. And the reason for that is basically Uniswap has their new V4 protocol, and they have a specific portion of that protocol called hooks. Hooks is just kind of like a workflow step that you can add inside, providing liquidity, interacting with the protocol. And that's where they're going to insert all of their compliance stuff. Anything that deals with KYC, checking to make sure that you are verified, that type of thing, with additional steps, additional smart contract information that they can put in there, is going to be inside of there. And also, Uniswap is available on more than 30 blockchains. So Aerodrome, while it's a fork of Velodrome, which is on the OP Superchain, only available on Base. And Coinbase probably wants to be able to spread this infrastructure to as many blockchains as possible. So I definitely see it from that standpoint, that they're just looking to find the biggest way to create the biggest moat possible for their KYC users. So anyway, I'll stop rambling about that. We'll start with you, Chase. Do you have any thoughts in particular about this bringing on either more normies, probably taking them away from DeFi, or is this just a good way to get their feet wet and they can do more after that?
This isn't necessarily for the normies. This is for the institutions.
There you go.
That they need to play in a KYC environment to know who their counterparties are. And they have too high a perceived risk on regular crypto protocols. So this is their way, or at least makes them feel better, makes them sleep at night knowing that a bunch of potentially client capital could be held in these pools. And if it were to be taken by someone, that person is KYC'd in a country with a legal system that maybe you could seize it much more easily. So I think that's the goal. We have been approached by similar companies that'll help us do a verified pool if we so choose. And in doing so, that would help quite a bit in securing capital from institutions at they're much more likely to put larger size or just kind of move faster and be more comfortable with it. And probably this is the future for, I'd say, 20 to 30% of crypto. The other
It's a large
remaining
number.
amount will be wild. Yeah, it'll be wild, but then there's going to be great arbitrage opportunities between these verified pools and unverified pools. And those who are verified in one will be able to take advantage of pricing in this closed ecosystem to then arbitrage against the larger DeFi ecosystem.
That's an excellent point. Robert, your thoughts, sir?
Yeah, these are the rails we've been waiting for, right?
These are the rails that we've been waiting for.
Yeah, I think this was inevitable. I mean, I think there was no, like, if you really think about institutions entering DeFi, it was not going to happen without this type of framework. So I am curious about the arbitrage, though. If you have these closed ecosystems that are verified, and then you have this other, 70% that's wild, I wonder how that kind of reaches the equilibrium.
Whenever there's an opportunity, someone will jump on it. So it'll just be a smaller group of people who will be capable of jumping on it. And I'm not entirely sure about this build, but maybe they've kind of got A, the first mover advantage, but B, they might have also carved a moat for themselves to be the only player in that arena. So I have to look more into how they've built it, but they could have built it so that they give themselves some preferential treatment.
I wonder if it'll be like the same kind of advantage as being an accredited investor.
That's actually a really good point, and I think that's exactly the reason why they've done this. So I'm more curious to see, now that they've kind of thrown the gauntlet down, how soon someone like Bybit, someone like KuCoin, someone like even someone smaller like MEXC or Binance does something like this, because this is clearly going to be a moneymaker, right? This is definitely going to be a moneymaker. Institutions happy to pay fees if they can get controls. I think this is a logical step for a lot of, because we've talked about Canton Network here before, which is a layer one that a lot of institutions are using to test DeFi controls and having a sandbox where they can actually try and do a lot of things. They've been doing this for almost 3 years now on Canton. So having access to something like this as an institution, I think, makes a lot of sense. Doing it at Coinbase, which, let's be honest, they've got the ear of President Trump, so they're going to have pro crypto regulation and most likely some decent economic favors by going on this protocol. Uniswap V4 just continues to become the gold, continue to become the gold standard. And maybe that's the lesson here, is that pandering to institutions will get you all the money that you want in this market.
I think we might be missing the mark here, though. I think
Go ahead.
the Trojan horse is the identity. Coinbase has been identifying people and getting them into their system for many, many years. They've got a solid platform for doing so. And if I could take that identity and then bring it over to a DeFi protocol that doesn't have the means to build out its own identity-based system, I could just trust Coinbase's identity or MEXC's identity, depending on how the protocol defines what is a good source of identity and a trusted source. So Coinbase has got that brand and a reputation. Once you get the identity down, then you just slowly become Facebook, making all of your money off advertising and knowing who people are, what they're interacting with. I'm not sure if they're going to sell that data or give you the option to, but it does open the door for that entire data play for the next 100 years, or maybe 20 to 30. Shouldn't talk about 100 years in technology.
That's multiple lifetimes.
Yeah.
That's an interesting thought. It's interesting you mentioned that, because I've heard multiple people talk about the fact that we need decentralized ID in a system like this. That'll be the kicker there. And And if you think about how zero knowledge proofs are going to work in the future,
Yep. They're working now.
Yeah, they're working now. Yeah, I'm just thinking about all the. There's been a lot of interesting announcements, right? That's interesting. I'll save it for another show. But basically, the things that I've heard recently have been very interesting, because this makes you wonder about anything that's out there. Proof of humanity, proof of person. That's all going to play into this
Exactly.
moving forward. No, I like that, because the thing that popped in my head right when we came on, before we came online, there is an announcement that XAI, which is Elon Musk's AI Grok thing, has joined with OpenAI, Microsoft, and Google and MGX into a $30 billion fund to try and lay down infra. Interesting. Anyway, not really going to try and interpret that for you guys, just because there's a lot of, after what Chase has mentioned, that actually lays out a lot of interesting possibilities as to why, after Elon has openly campaigned against Microsoft and others, like with Project Stargate, how he would join a private little $30 billion fund along with them on the backside for infrastructure. Interesting. Anyway, let's move on to our guest here at Chase, co-founder of Neptune Finance. And again, thank you so much for being with us, Chase, today. Thank you, of course, to Robert. If you like what you hear today and you love the value, please, would love for you to like and retweet the stream on Twitter, or if you're on our Facebook, please like, subscribe, follow for notifications. We're here every Wednesday, 1 p.m. Eastern. I also want to say hello to our podcast audience. This is also going to be on for our audio listeners. Thanks for joining us, and we'll go ahead and start with specifically about Neptune Finance. So, Chase, if you could just introduce the protocol here to the community, tell us a little bit more about what Neptune Finance does, and we'll start with that, because you're out in the injective ecosystem.
Sure. Yeah. Well, quick background. The team started on the Terra ecosystem. We were actually building into what was called the Anchor protocol at the time. That was the Terra ecosystem's largest lending protocol. And we were building automated vaults originally to take advantage of the low borrow rates that the Anchor protocol was offering, because we noticed a lot of people on the lending side, not a lot of people on the borrowing side, and that was the missing link to make the Terra ecosystem sustainable. Didn't quite get there. Had to pivot, realized that our lending market was no longer functional. We decided to build it ourselves. We have a pretty wicked smart contract dev who, once everything collapsed, took a week or so and just kind of said, there were some things in that Anchor protocol I would have changed, like especially for other builders for building on top of it. And I didn't understand why the interest rate didn't try to adapt as well to meet market demand. So he came up with what is Neptune today, which is a lending protocol on the injective ecosystem with a completely novel interest rate mechanism. So that is what was built into the core of Neptune. So the way it works is a lot of lending markets will sit underutilized, especially on long tail assets meaning like lesser known coins. And if you have $100 lent, maybe you'd have like $40 or $50 that's borrowed. That's a 40 to 50% utilization. And it's the borrowers that pay the lenders. And if you don't have enough borrowers coming in, the lenders don't get a very strong yield. So we built a system that adapts the curve of the interest rate based on the market. So how many people are borrowing at a given time? If we're not at our target, then it is going to either increase or decrease. So it's like stretching the curve up and down to make rates higher or lower, constantly encouraging more borrowing up until a point. So this is what Neptune is under the hood. A lot of people don't necessarily see that or understand that. They just see our rates. And we have basically put everything into the protocol possible to be as modular and easy for other developers to build into. There's multiple accounts. It's all cross collateralized, so you can use one token to borrow 5 or 5 tokens to borrow 1. It's entirely up to you. And then you can separate those into different accounts however you'd like. So, I mean, there's a lot else under the hood in the liquidation engine that's different too, but I won't get into that stuff right now. But we're at a stage where we have been live on mainnet for a year and a few months, and we just started getting our integrations. So our first integration was a looping vault from a staking derivative token. So you get a yield from the liquid staked token, and then you use that to borrow the original token again, in this case, Injective. Since the borrow rate on Injective is lower than the staking rate, you get a positive return by borrowing it just to restake. So that we partnered with the Hydro team to create a looping vault. And then there's Prism, which you can abstract your yield. So although it's a variable rate yield, when you lend to Neptune, you get an N token. You can take that to Prism to now get a fixed rate on your stablecoin, which is really cool. That one just went live 6 weeks ago. And then just 2 weeks ago, Helix, the largest perp DEX on Injective, integrated yield earning trading accounts. So on Helix, there's a button, lend to Neptune, and then you can open your trades without having to withdraw from Neptune. It's all built into their front end, really seamless. And yeah, it's just an example of where we see Neptune being. It's this integration heavy, builder heavy protocol, but for power users, it's got all the features you need to on the front end. And yeah, and our token went live just December, mid-December-ish. And we saw an airdrop at January 15-ish, as you can see with the bar that's on the screen there. And then after the airdrop period, we've seen it pick itself back up again. So interesting times, very early days still on the token and early days on the integrations, but that's Neptune, and that's what we're going for right now. Happy to get as deep as you guys want.
Yeah, so I guess the question that, and I'll ask you the same question I asked you in Salt Lake City was, what lured? I mean, obviously coming from, and I'm looking at map of zones here for anybody who's on the audio podcast, is obviously the ties to Anchor was really the big part on sticking inside the Cosmos IBC ecosystem. What led you guys to choosing Injective? Because obviously there are other protocols that have just created their own layer 1 app chains. What got you guys to choose Injective?
So when you're builder focused, you want to have as many integrations as possible, and you want it to be as fast and as cheap as possible in order to both test out your build, but also to integrate and have arbitrage or whatever you're trying to use Neptune to take advantage of. The faster it is and the cheaper it is, the more it can be firing. And if we are the leader on the rate side, and we have the cheapest gas and the fastest chain, then it kind of serves as like the heart for everything else in DeFi, where our opportunities are found by using Neptune and then taking tokens elsewhere. So we stuck in Cosmos because, one, it's a superior tech stack for what we were building. At the time, we shopped around a little bit, but our team is experienced in Rust, and we do know the Cosmos stack, so that we have a bias there. But from what we looked into, it really wasn't possible to build what we wanted to build in other ecosystems, at least not as optimized as we have built it. And then Injective is the perfect middle ground between the EVM institutions and Cosmos. So they've got the volumes, they've got the perp trading DEX, and there's a lot of opportunities between a lending platform and a high volume DEX, especially for perps as well. So that's what pointed us toward Injective, and then Injective's planning to launch their full EVM native layer in the next few months here. So I think testnet's coming up either this month or next month, and we'll be able to be using all EVM assets within Neptune. So it seems like it was the right pick at the time, and now that they're deploying this, we should be able to do everything we wanted to do on EVM anyway.
Yeah, that's kind of the fun part, is that Injective has always had an EVM facing side, but it wasn't until recently that, at least from a Cosmos standpoint, that EVM is now going to be a canonical piece of that puzzle. So now that we have this EVM plug inside of there, how easy do you think it's going to be to essentially have what you're talking about, having fairly easy access to cross-chain EVM assets inside of Neptune?
Yeah, everything ERC20 will be able to come into Injective seamlessly.
And that's pretty amazing, because you're able to have, multiple lending AMMs have even more vaults, that type of thing. I guess you're partnered with Hydro specifically for that. But I guess from a roadmap perspective, where do you see all this playing out in the next 3 to 6 months?
I mean, in which regard? We're building in many directions. So
sure. Well, I meant in terms of just where Neptune is positioned. With this EVM partnership coming live to mainnet fairly soon. What's going to be the biggest focus for you guys with that in mind?
More assets, more listings.
Yep.
Anything that's highly liquid, we want to have listed. If there's a reason to borrow it, we want it as a lend borrow asset. If there's a reason to borrow against it, we want to list it as a collateral asset. And as long as there's deep enough liquidity in that asset, we're happy to provide it. And there's some big tokens that people are looking for that we currently don't have. First, the Bitcoin variant is one of them. Although it still is going to have to be a wrapped something.
Right.
So we want exposure, people to be able to borrow against their Bitcoin. And I mean, you can go through the coin market cap list, and you can probably identify a half dozen to a dozen high quality ones that you can imagine we'd want to list in the near future.
No, that's a good point. And to answer Greg's question, this is on Injective blockchain. What I wanted to ask, just for because we get a lot of questions on this. A lot of people don't realize the value of having a savings and loan facility with regards to your strategy. Obviously, none of this is financial advice. Your own research, your own efforts cause your own results. But a lot of people don't realize the value of having, borrowing and lending with a lending AMM as part of your strategy in DeFi. A lot of people will just take a lot of long-held assets and park them here, and then borrow stablecoins to farm those with higher rates, or any other assets. So, if you could kind of speak to that in terms of the value proposition for newer investors, why using a lending AMM is a really good strategy.
Yeah. So we recently saw all the volatility come and wipe all of our rates out, basically. So we did have much higher rates on USDT and our stable coins, but now that it's quite low, there's a big opportunity to borrow from Neptune. And you could see that here on Atom, for instance. Atom is a 2.5% borrow rate. Well, you can stake Atom for like 14%. So if you're okay with that unstaking duration risk of 21 days, you could be borrowing for 2.5 to earn 12.5, basically making an extra 10 off of a collateral that you wanted to hold on to anyway. So if you're already long ETH or you're long Injective, you could be using the wrapped ETH or the HING if you want to be earning the staking yield while doing this trade. But there's a lot of things that you could piece together, where you just find rates in one place and look at the borrow rates on Neptune, and if there's a gap between them, there's an opportunity there. So there's friction that makes it hard to take these tokens everywhere, but all across Cosmos, very seamless. And once the EVM layer is live, there'll be way more opportunities for people to take tokens back into EVM land for these opportunities. So yeah, even just borrowing our stable coins right now, you have 4.2% borrow rate on USDT, which is incredibly low. There's lots of places where you can get more than 4.2% on USDT. And you can also do more complicated strategies. So you could do like a delta neutral trade, which gets a little bit more complicated, but you're basically you're going long on one side using Neptune, for instance, and then borrowing funds to go short on a perp dex. And then there's funding rates for perp dexes. And usually people are bullish, and there's more people, the bulls are paying the bears most of the time. So you can open this trade being equal on both sides, and you're getting paid USDT for holding both sides of this trade open.
And you just pay down whichever ratio you need to.
Yeah. And that was actually something that we built out with a new dev that I pulled in as part of a hackathon project, and we just automated that through a little bot. So we just got that live on Monday. I mean, it's not live for the public, but we just got it working and opening the position, closing the position, all through a Telegram bot on Monday.
Really?
And yeah, and it's all it's pretty cool. And it will tell you the rates, tell you what it was over the last 7 days, 30 days, spit out, tell you the volatility, give you an update on everything. Yeah, it's pretty neat. And that's something that's been in the back of my mind to build for a while. And now that most of all the core parts of Neptune are built, we really have time to get into these strategies and deeper DeFi moves. So there's a lot to unpack with the lending protocol for sure.
Robert, do you have any questions for Chase?
Nothing too specific. I'm pretty familiar with all the mechanisms here. I think it'd be interesting to dive into this. I've always had Injective on my radar, and I'm just curious to dive in and check it out. Check out Neptune and see what kind of edge and different features exist here.
Yeah, and that's probably another question that we should probably broach too is, it being Cosmos IBC, what's the easiest way for someone who's listening to this podcast? Let's say they don't have a Kepler wallet, they don't have Leap, or even MetaMask. What would be the easiest way for them to get to Injective and get really just started?
If you do have a wallet established somewhere else, it is usually quickest to use USDC. And then you would have to obviously pick a wallet that is supported on Neptune, the most popular being Kepler, but any of them would work. And bridging USDC into Neptune is the easiest, lowest slippage path for most users. But in some cases, if you are on a centralized exchange, the INJ token is listed on a lot of those exchanges, and you can go direct from the exchange into a wallet that you control. So that could be a path for you as well. And then same thing with Atom. If you have Atom on any other Cosmos chain or TIA, these assets across Cosmos move quite fluidly. It's pretty easy to bridge it over. And that would imply you already have Kepler or Cosmos Station or something working.
Got it. Yeah, when we have guides on TVL specifically how to get the Cosmos. We do recommend Kepler as the main wallet, although Leap Wallet is also quite good. MetaMask has a snap for it, but may not be the most intuitive, to be quite honest. And overall, we're not going to get into the how too much today, but utilizing great bridges like Squid Router, I think, is probably the easiest way to kind of get in if you're coming from EVM.
Skip has made a lot of progress.
Skip too, yeah. Skip's doing really well. These are all tools that are good to get in there. And I think once the EVM portion is live, I think it'll be even easier, wouldn't you say?
Yeah, and we're adding these things to our front end too. So you can just land on the Neptune website, get yourself set up.
Nice.
Yeah, not there today, but should be in the next month or two.
Very good. Excellent. And yes, it is native USDC.
Yeah.
And with regards to native USDC, it is issued by Noble, Kelly, just so you know. Because it is an IBC asset, it is easy to just ship around regardless. So Noble is just the issuer of the native USDC. It's what you would get if you were to go to Osmosis, for example, and swap for it. So that's how that would work.
You can also, with the CCTP thing that USDC has, that makes it pretty easy to bridge anywhere. I usually use Skip, and Skip is quickest interface, in my opinion, for it.
Well, we'll have to check out Skip. I haven't done a deep dive into Skip, so thank you for that. That was the one thing I definitely wanted to get across, and we'll work together to make a great guide for our communities to come over and check out Neptune. So
awesome.
Love it. Thanks for being here, Chase. Really excited to dive deeper into Neptune, specifically with these interesting. If you have a chance to share with us a little bit on the bots specifically for that delta neutral strategy, that's a fantastic value, I think, for people need to understand, because it's very hands off. You let the bot take care of it, and oftentimes stuff like that's the easiest way to continue to easily make money in this space.
Can be, yeah.
Can be.
Send over a link.
Yeah, that's great. Especially in a time where we have somewhat choppy times. Delta neutral can be a little iffy, but once things flatten out and once we get into much safer waters, delta neutral is a very, very strong strategy, specifically for minding your P's and Q's, as I like to say. So,
yeah.
But yeah, go ahead.
I was just going to share a link to see the project.
Oh, sure. Let me see if I can grab it here real quick. Oh, it's a YouTube video, okay?
Yeah, just a quick little demo, but it could show you the power of a lending protocol without even having to know what you're doing necessarily.
I went ahead and put that in the put that there in the notes. Oh, there we go. Oh, so it is using Helix, right?
Yeah. So it explains the strategy, shows you the math through it all, and we'll execute it all for you.
Nice.
It'll ask you how much you want to put into it, all in ING terms. So this is only configured for the ING market currently, but could work for wrapped Bitcoin or wrapped ETH in the ETH market, or anything that we have a spot market and the perp market for. And then it executes all the commands for you, opens your account, opens your trade. You see the Neptune tab update itself automatically. That was all done through the bot. And then you see on Kepler, I think you have to refresh. Yeah, so the money came out of Kepler in order to open it. And you can view your position, and it'll show you everything going on inside the position. And then there's a little AI snippet to analyze with AI. It'll give you a couple lines to explain it all to you. This was part of a AI hackathon, so we kind of had to throw it in there as well, but it's a nice little feature. And then this is what we just got work on Monday. We got the closing working properly. So it was able to open before, and now it's able to close all your positions going back. So it's a neat little project, and we want to, keep building on this and make it more of a structured product, or encourage other developers to build these things into Neptune. We don't need to be the ones building it.
Yeah, I think definitely, we had Karima on last week, and she's big into vibe coding. I think vibe coding wise, you might be able to build stuff like this to just keep things rolling. So it's cool to see that Neptune has the pipe, has the infrastructure to accept things like this from like an AI agent standpoint, which obviously I do believe is going to be the future. We're going to have more natural language type stuff, pop up, so that you can literally just have an assistant pop up and tell you, these are the rates at Neptune. Do you want me to open a delta neutral position here, or any type of position running forward? So yeah, that's really exciting. Really exciting. Thanks for sharing that.
Yeah, that's where we see the future heading to, and it's also all the hype currently. So yeah. Everyone loves their AI agents today.
Everyone does love a good AI agent, that's for sure. So definitely wanted to, and again, just want to be respectful of everyone's time. Thanks to Chase from Neptune Finance being here, co-founder, nept.finance. Definitely go out and support the project. We met them in Salt Lake. Really enjoyed the talk with you and Keegan and the team. Feel free to plug whatever you like.
Builders, users, of course, Neptune's cool. We've got a lot coming up down the pipe. We're just getting started. We've got a lot of campaigns that'll be kicking off in the next 2-3 months. So get yourself positioned before it all starts, and then you'll be the first to know.
Do you guys have an active Telegram or Discord?
We do, yeah. Fairly active in our Discord or Twitter. We use our Twitter as our main megaphone. And then Telegram to a lesser extent. Usually Telegram is for quick answers for our mods to take care of. If you have any deeper questions or want to build, they'll direct you to our Discord.
Right. So Discord and Twitter for sure. Main ways to keep in touch. Chase, thanks so much for being here. Looking forward to talking more about this, getting some guides out, and really just getting people over to Injective. Just as a disclosure, I'm a long-time Injective holder. I do have a fairly decent bag of hydro and stuff like that. So that's my disclosure on that. So, I do have a bias when I talk about Cosmos as one of my longtime bags in the space, but I do see a lot of promise into what's being built there, and excited to see what happens with Neptune. So best wishes. And again, thanks for being here today.
Thanks for having me, Chris. Nice to meet you, Robert.
Yeah, nice meeting you too.
Robert, I guess I don't have to say hire this man anymore, but talk to me about Talisman.
Technically, no, yeah. I'm with the Talisman team now in a more official capacity, and they're really. I know there's a lot of Rabby users here, but I'd love to recommend giving Talisman a try. It's a really smooth UI UX experience there, and there's a lot of good features for beginners and for pros. And we recently launched. We have an ongoing Quest program because we're doing a token launch later this year, and so we launched. Yeah, that's right. Yeah, little alpha, right?
Alpha there, eh? I like that.
Yeah. And so it's ongoing. There's been a variety of partners, Arbitrum. It's a lot of Polkadot projects as well, because they were traditionally a Polkadot wallet, but now they're EVM as well. And we recently just launched yesterday, actually, a Quest partnership with Beats Finance on Sonic. And that's one worth checking out. It's kind of a primer for DeFi for our broader audience, and kind of bringing in some of the DeFi crowd. And so, go to talisman.xyz is just to check out the wallet and get that downloaded and installed. But the Quest site is quest.talisman.xyz. So definitely worth checking out.
Quest.talisman.xyz.
Mm-hmm.
Excellent. Thank you, sir. And of course, thanks everybody for being here. Just one last plug, of course, for the platforms. Go out, check these out. And if you want to learn more about how to even get started, if you really heard what you like today, join us at TVL, school.com/beacon. Absolutely free. You'll get the fundamentals you need to go to somewhere like Neptune Finance with your hard-earned funds. Go and start making the great decisions that you need to go out and find that race towards financial freedom. And also maybe using Talisman. We'll have to look at that on a future call and check that out, because the moment you said Polkadot, I was like, oh, finally a Polkadot wallet that probably could be quite useful, because we do have members that have a lot of dots. So being able to interact with dot-based protocols, maybe we do a feature on Talisman sometime in the very near future. So again, feel free to join us to school.com/beacon. We're here every Wednesday, 1 p.m. Eastern. We've been doing a form of this show every week, every Wednesday since 2021. And you'll see some of the best people in all of Web3, DeFi, on-chain, and blockchain here every week as we continue with our great panel of guests. We'd love to have you back again, Chase, in the future. Thanks for joining us today. And stick around for a quick second. So again, we'll see you next week for the TVL show. And of course, we have a free training on Total Value Locked every Friday called Beat the Banks, 3 p.m. Eastern. Join us on there for that as well. With that said, we'll sign off from here. Beacons up, banks down. 07. Take care, everybody. Have a great Wednesday.